Okay, so let's dive in. The sound of modern warfare, it's really shifting. It's less jets and tanks, more this electric hum.
Right. The hum of these small unmanned aerial systems, SUAS, they've become totally crucial.
For battlefield awareness, precision strikes,
Hmm.
and way cheaper than the old stuff.
Absolutely. And that's blown up the military drone market. We're talking projections, over $47 billion by 2032?
Yeah, huge numbers. And that brings us to Red Cat Holdings, ticker RCE on the NASDAQ.
Exactly. It's set up as a kind of pure play investment vehicle. If you want exposure to this specific military drone growth, this is a way in.
So our mission today
Yeah.
is Red Cat, with its big government contracts and the whole Made in America thing, really set to dominate.
Or are the financial losses, the serious allegations,
Huh.
is it more hype than reality? That's the question.
To figure that out, we first need to talk about this blue UAS mode, right? Why does Made in America matter so much here?
It's critical. Basically, the U.S. got worried about relying on foreign drones, especially China's DJI, national security concerns, data leaks, supply chains.
Which led to actual legislation.
Yes, the National Defense Authorization Act, the NDAA, specifically Section 848 from fiscal year 2020.
And that says?
It basically prohibits the DoD, the Department of Defense, from buying foreign-made drones. Simple as that. It creates this protected market.
A walled garden for U.S. companies.
Pretty much. And inside that garden, you've got the Blue UAS list.
Okay, what's that?
It's managed by the Pentagon's Defense Innovation Unit, DIU. They certify drones that are NDAA compliant, cyber secure, essentially pre-approved for any U.S. federal agency to buy.
And Red Cat's in there.
That's the key advantage. Their main subsidiaries, Teal Drones and FlightWave Aerospace, they have drones on that exclusive list.
So for you listening, what this means is that getting these drones into the hands of government agencies is way, way easier. The usual procurement headache. Streamline.
It's a massive sales accelerant. But it's not static. They have to keep innovating to stay on that list.
Okay, so let's look at Red Cat's actual stuff. Their strategy seems to be acquire, right?
Yeah.
Build this whole portfolio fast.
Yeah, an integrated portfolio of robotic hardware and software is how they put it, for military missions.
And the star seems to be Teal Drone's Black Widow.
That's kind of the crown jewel, yeah. It's a small drone, fits in a rucksack for short-range recon. SRR.
American-made, blue UAS certified, secure comms, thermal sensor. Sounds impressive.
And crucially, it got selected for the U.S. Army's SRR Program of Record.
Program of record, that means it's the official, standardized choice for long-term buying.
Exactly. That's a huge deal. Plus, they're partnered with Palantir for AI stuff, like navigating without GPS.
Okay, what else is in the family?
FlightWave Aerospace adds the medium-range capability with its Edge 130 Blue.
That's the one with the weird design.
Huh? Yeah, the VTOL tricopter. Takes off like a helicopter, flies like a plane. Best of both worlds for endurance and deployment. Also Blue UAS certified, getting orders from the Army National Guard.
And then there's Skypersonic.
The indoor specialist. Think tunnels, sewers, buildings, places where GPS doesn't work. Remote piloting capability, too. Potentially very useful in, urban warfare scenarios.
Integrating all these different acquisitions must be a challenge, though.
Definitely an operational hurdle, but that Palantir partnership isn't just for the drone's AI. They're also using Palantir's warp speed system to help manage the manufacturing scale-up, trying to get ahead of it.
Okay, let's pivot to the financials, the flight check, as it were. They needed money to grow, right?
Oh, yeah. They beefed up the balance sheet significantly. Over $76 million recently through stock offerings and debt financing. You need that cash to build factories, buy inventory.
And revenue, how's that looked?
It's been a bit choppy. Grew from about $6.4 million in fiscal 22 to nearly $18 million in 23. But then it dipped back to $7.3 million in 24.
Why the dip?
The company attributes it to a, quote, pause in manufacturing while they retooled specifically for that big Army SRR program.
Makes sense. But they're still losing money.
Consistently, yes. Big net losses, like over $65 million in fiscal 24. But, that's pretty typical for a company in this high-growth, heavy investment phase.
So the real story is the future projection.
Absolutely. The linchpin for the whole investment case is their guidance for calendar year 2025. $80 million to $120 million in revenue.
Wow, okay, compared to what they just did.
Well, Q1 2025 revenue was only $1.63 million. So going from that to $120 million for the full year, that requires a monumental production ramp-up. It's a massive execution bet.
Which brings us to the bull versus bear case. What are the arguments?
The bulls point to really compelling stuff. That Army SR program validation, the protected blue UAS market, the diverse portfolio, decent analyst support, the credibility of Palantir.
And the fact they just raised all that cash.
Right. They have the money to try and scale.
But the bears.
Yeah.
There's a short seller report, lawsuits.
Yeah, serious criticisms. They allege RCAT is overstating the value of that SRR contract, saying it's maybe closer to $25 million a year, not the huge numbers implied, and that tech refresh cycles are faster.
What else?
Allegations about manufacturing capacity being way lower than needed, like maybe 100 drones a month versus the thousands required. Plus the ongoing cash burn, shareholder dilution from raising money, and some notable insider selling.
And competition.
Years from the huge defense primes and other well-funded drone startups also chasing this market.
Interesting. And the CEO, Jeffrey Thompson, he has a lot of shares, right? Skin in the game.
Over 12% ownership, yeah.
Mm-hmm.
And the board has deep defense experience, including a retired 4-star Army general, which is a strength but also puts them under scrutiny given the allegations.
So wrapping up, RCAT Holdings feels like, well, a classic high-risk, high-reward situation.
Absolutely. It's a quintessential speculative investment. You're betting directly on management's ability to pull off something really difficult.
So for you, the listener, it boils down to a bet on, what, 3 things?
I'd say. 1, will that blue UAS moat hold up? 2, can management actually execute this massive manufacturing scale-up? And 3, can they successfully fight off these legal challenges and allegations?
A lot hinges on those points.
Definitely. So here's something to think about. Beyond just making drones bigger or fly longer, what's the next big tech shift in defense? What could disrupt even today's key players and change the game all over again?